In the metals quadrant, taking a look at the May copper, which is lower for a fourth consecutive session and the second move lower this week of more than 1%. Since the high print on March 18th, copper has now fallen over 3.7%, and copper is finishing the week down about 2.87%, only the first down week since the week of February 5th. The high today, 4.0665, was only up 0.2%, so it was kind of a straight down day. The low today broke that 4 print, 3.9980, and that was down 1.49%. We finished pretty near to that low, although slightly above that critical $4 mark. The FOMC aftermath is still taking place in the industrial metals sectors. Profits taking seems to be the driver post-FOMC, at least in the industrial metals. The market still has 3 rate cuts priced into 2024, according to the CME Fed Watch tool. Still, the probability of that last rate cut in February has dropped by a couple of a percentage point, only sits about 33% probability now. And outside of the June rate cut, which is priced in at a probability of a little bit more than 66%, the following 2 rate cuts for the rest of 2024 are still the highest probability events, but they're both below a 50% probability. So the market seems to be moving more towards a high probability of 2 rate cuts rather than 3 25 basis point cuts. And that's not necessarily bullish for copper. Now, we also have a yield versus US dollar thing. Copper has an inverse correlation to both yields and the US dollar, but clearly one dominates. We have yields lower this week, but not by much. They didn't even recover the rally that we had the previous week in yields, but the dollar, on the other hand, is finishing pretty strong. So clearly that inverse relationship, at least for now, is dominating over copper, because copper, again, is reacting more to the strength of the US dollar today.